Hello and welcome to the latest instalment of MFS's Let's Talk Property podcast, where we connect with industry experts to explore an array of topics within the dynamic world of property. Before we dive into today's episode, I just want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and the guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com and be sure to keep up with our podcast updates on Instagram at MFS_LTP. Now let's get started. Hello and welcome to the latest episode of the Let's Talk Property with MFS podcast. Got a very exciting guest here today. We've got Michael Street from Word of the Street joining us, and he's going to be talking about moving from employment into setting up and structuring your own business. So, Michael, thank you very much for travelling down today. I know you've come
for having me.
A fair distance.
Yeah, fair distance with a little bit of problem on the way, but never mind, we're here.
Yeah.
We're firing.
We made it. So, obviously you used to work in the lending space for various lenders over the years, and then you've moved into your own business now. So how have you found the change from employment to self-employment and working by yourself effectively?
Yeah, it's been eye-opening, I think, to say the least. I think the position I was in as working for lenders is similar to yourself now, where you have products and you have availability to help support clients and to build out on their existing propositions. As a broker now and building out my own business, I think it's a much stronger offering that we can put for our clients, forward for our clients, and it's beneficial for me, and I like it because the main focus for us as a business is to actually embed ourselves into our clients' businesses. And what I mean by that is we're not just there to support the raising or the acquisition of finance and property. We're actually there to understand the end goal. So for
the whole journey, effectively.
Yeah, the whole journey, exactly that. So for our customers now, when they come to us, the first questions we're asking aren't how much are you paying, what's the property type, it's what are you trying to achieve? What are your ambitions with property? What is the end goal? And where would you like to take it? And then we work backwards in the way in which we can support that growth and that journey.
That's amazing. I mean, we speak to a lot of people very similar. They when you speak about property strategies, I like to similar work from the back, work from the end and work my way backwards. Because
reverse engineer it almost.
Yeah, because they say, well, what's the best option for this? Well, I don't know what you're looking to achieve. Unless I know what you're trying to achieve. Is it growth? Is it yield? Is it, whatever it may be? So we do find that a lot. So I think it's amazing that businesses like yours are doing this and there throughout the journey. It's not easy starting your own business. What sort of struggles or what difficulties have you had going alone effectively?
I think so. The business itself, Word on the Street, is made up of myself, my fiance, and business partner Jasmine. She insists that I say it in that order: fiance and business partner, as opposed to business partner and fiance. So we make sure that that's always the way it's said. I think, I suppose it comes off the back of what I've just said in terms of the products that we're now able to offer. There's so much different types of underwriting and criteria from lender to lender. Yeah. We offer products from we help support products from bridging finance, development finance, buy-to-let mortgages and commercial term. And each underwriter we come across, even in the same business, has different techniques, different requirements, different ways of looking at a deal. So for us, one of the main challenges as we've gone from being a lender almost, or working in a lender space, to now being a broker, is understanding which lender,
multiple criteria,
which criteria fits the specific deal and transaction at hand. But I think more importantly, once you're in that lender and you know it fits, ensuring that the underwriter that you get is painted a full picture of what the deal is, so that they've got everything on day one, so that we're not asking questions either, post legal instruction or on the day of completion, which we all know in this industry is quite common, especially amongst certain bridging lenders. We get questions on the day of completion that could have been asked on day one. Yeah. But I think there's an onus on us as brokers to help support underwriters and lenders to make those decisions early doors, as opposed to trying to hide things. We've got to be honest, we've got to be transparent.
And you generally tend to find as well, underwriters like that, so when they do see a case coming from someone that they know has packaged it well, they've done the DD, done the KYC on the client and knows the full picture, it just makes it a lot easier. And at the end of the day, it's all about customer experience, isn't it? If we know at the outset the full picture of the story, those questions end up being that big, It just makes the whole process a lot quicker, doesn't it?
Yeah, agreed. And ultimately, the reputational risk is on us as the broker, because we're the one, effectively, we will always have to be presenting the deal back to the client. So if I'm taking information and not sharing that with the lender who we choose or who we think is the right fit, when it comes back and something does change and it's us that's missed it, it's us that are at reputational risk. And as a small business, you know, reputational risk or reputation is absolutely paramount.
Yeah.
And our relationships with customers is everything to us.
Of course.
You know, I say all the time, for us, I'd much rather have 10 customers or 10 clients doing 10 deals a year than 100 customers doing one deal every 2 or 3 years, because it does two things. One, it keeps us busy, but two, it's proof in the pudding.
Yeah.
You know, it helps us to be credible when we're speaking with other customers and they say, what have you done?
Yeah.
And we can evidence that.
Yeah.
You know?
And I've noticed as well, you've been very active on social media late. I love it.
I'm trying.
So, you know, obviously the branding, especially in the mortgage industry, it's a huge part of it. And I think, you know, your brand as a whole, I love, you know,
Thank
word
you.
on the street. It's, you know, it's really
It's a play on words. I'd like to take credit for the name, but again, fiance.
There you are. Look, has that really helped you drive your business forward? You're getting a lot of customers reach out to you by saying, look, I see you on LinkedIn or I see you on social media. I need help with this.
Yeah, no, I think, I mean, historically I was in the armed forces, and one thing that I've taken from that and will continue to take from that when doing anything is a saying that I share with so many people, and it's do it nice or do it twice. And with that, it can work both ways, right? So for me, it's helped us, because when we started to do the social media thing and we started to do content and to do videos and whatever it is, the key and most important thing is consistency. What I didn't want to do is start something and then not do anything again. You know, do something for a month, but then nothing again thereafter. We've had to be consistent, and with that, it's challenges. You know, because
takes time, doesn't it? It's the killer.
I mean, look, and I'm no expert in marketing at all. I'm horrific at it, to be fair. But
you haven't seen me have a go yet, so you're right.
but what we can do is try and do it the way in which we see it. You know, so what I mean by that is, have a vision, stick to it, try not to deter too much, and try and make sure that the message that you're giving continues to be consistent. And that's from colour schemes, from haircuts, you know, from wherever it might be. Is trying to stay consistent and be transparent with the message that you're getting across. And I think the industry as a whole, there's lots of people trying to do it. Lots of people doing it very well. Lots of people trying to do it. I won't say not so well, because I'm not judging anybody else.
You see more people do it. You see more people do the videos online, talking about whether it just be a mortgage update or talking about certain products that banks released or whatever it may be. So it's something you see a lot of now. You
see it a lot, and I think there's a very fine line between advice and top tips. And I think there's a lot of people who are trying to do it who aren't necessarily in the strongest position to do so. And I think that would always be my message to, you know, brokers who are giving this information, or people who are giving this information to the general consumer, and also the general consumer who are taking this information in, and that's always take it with a pinch of salt. Make sure you're always going away, listen to whatever you want to listen to, but always go away and do your own research, your own DD, and make sure that the information you're taking on board is accurate and it's fit for purpose, you know, against your model and what you're trying to achieve.
Because that's the thing with property, you know, if you take advice that's bad, it can be very expensive in a very short space of time, and we see it quite a lot where you know, people may be advised on products that probably weren't suited for their needs, and the broker's not taking into that, or you know, you see it a lot. A broker put someone on a bridge loan, but they're not looking at the exit. To make sure that they can actually exit, because it's all well and good getting someone on the bridge, it's getting them off of it, which is
100%.
You know, which is the key part of that.
The exit is the priority.
Yeah.
The exit is the priority, especially with bridging. And that, I guess, comes back to what I was saying earlier about embedding ourselves into a customer's business. You know, because there is thousands upon thousands of brokers in the industry who all they're interested in is the prop fee. That's the first question they ask a lender when they speak to them. How much are you paying me? And you know, being frank, being honest about it, we know people who do that. And for us, it's the last question, because it's the least important thing, albeit we need to make money and we need to earn to continue the business and to grow. But the most important thing is making sure that the customer's deal or transaction is placed with the right person first time.
Yeah.
And by default, that will make us more money, because if we can place, let's say, for example, an acquisition on a bridge with the intent to add value, if I can place that deal with the right lender first time and the customer's happy, I know they'll come back to me for the exit.
Yeah.
Dead simple. If they're, whether they're selling it or whether they're refinancing it, if they want to raise more finance, there's only one place they're going to go, and that's to us, because we provided them with a level of service that suits their needs and requirements.
Yeah, and that's what I like. I call
it's simple.
Sticky money.
Yeah, it's that simple, but people make it complicated.
Yeah, and the thing is, especially if you're working with people that are regularly doing deals, you want you to be that person that they call every time. And if I have I've had bad service from people before, and I never go back there. So again, you understanding their whole journey. I think a lot of people appreciate that as well, because you're saying, right, fine, we'll deal with that later. But what are we trying to achieve here? I think that goes a long way, especially in this industry, and with all the new consumer duty stuff that's coming out soon, and everything like that. So. I think it's going to be good for the industry, because again, it's going to put a sort of line in the sand of what sort of level of service customers should expect whilst going through these deals. Now, I just wanted to touch on how you came about what would you say your USP is, and what sort of got you there? Is it the complex stuff? Is it what's your sort of sweet spot, or where do you like to position yourself?
I suppose that complex for us, so the way, because of the background, so I guess to touch on it, my background in the specialist lending industry is, sort of 7, nearly 8 years. I've always worked in specialist lending, so I started my career in the finance industry at Together Money, and then moved on to another bridging lender called MS Lending Group, who you'll know. And so I've always been in and around bridging and specialist type lending. And throughout the most of that period, it's always been dealing with complex transactions, whether that's multiple directors, adverse credit, whether it's complex limited company structures, overseas foreign nationals, overseas expats, whatever it may be, portfolio landlords. So I think just by default, not intentionally, but just by default, because of the nature of the customers we've worked with for the last 7 years, 15 years including Jazz's time in the industry, collaboratively, we've only ever dealt with complex type transactions. So when I'm talking to a customer and they're telling me about a case, and I see it as being simple, because I understand it, I know it, I live and breathe it.
It's quite nice.
But for your everyday buy-to-let broker, they're going to look at it and go, what do I do with that? So for us, in terms of USPs, it's our knowledge and our experience that we bring to customers. Isn't always easy to get across straight away, because at the minute when we first speak with someone, we're just another broker. And that is where our social media does help us, because we can use evidence of cases and transactions we've done to tell people about what we've done and how we've done it. Again, coming back to the transactional type stuff we don't want to do. Of course, we will transact with customers who only do one deal, but the main bulk of what we do is about being part of somebody's business. So that's a USP for us, is actually building ourselves into the business and helping them see their own future and helping them realise their ambitions. Whatever that may be, whether it's build a portfolio, whether it's sell what they've already got, whatever it looks like. And anything else? I guess just referring back to what I said earlier, do it nice or do it twice. Giving that unbelievable level of customer service on day one,
white glove service.
As opposed to just trying, throwing stuff to lenders and hoping for some of it to stick.
We see quite a bit of that, but I bet you love it when a client comes to you and says, "Oh, I've got this really massive problem. This is so complex. I don't know what to do." He shows you, you're like, "Yeah, that's easy."
No, 100%. Yeah, and I think it is surprising. I think a lot of people do see the value in that, especially. We have a customer at the moment who's got a portfolio of around 180 million quid, and we're doing stuff for him that even I'm learning from. Because we're doing so many different types of stuff, bridging, term, development, so many different things.
I can imagine it's a bit of a minefield.
And it's a huge minefield. And it's a huge minefield, but it's good because we're always learning. We don't know everything.
It's good to test yourself as well.
100%.
I'm a strong believer you're always going to be learning. You're always going to, I still hear stuff now where I've been doing this for 15 odd years, and I'm like, you know what, I never knew that. I feel it. suppose that brings me nicely onto sort of the relationship side of the business. I've spoken about it quite a lot.
Yeah.
You know, for you as a business, how important is it to you to nurture these relationships, build these relationships, you know, get referrals? It's sort of the lifeblood of your business, would you say?
Without a shadow of a doubt, it's the longevity. It's what's going to enable us to continue doing this for the next 2, 3, 5, 10 years. Ultimately, we want to build a business that is there for our customers.
Yeah.
And those relationships are paramount. You know, and it's not just business relationships, it's actually building friendships with the people that we work alongside.
Because that's how it becomes, isn't it? I've got a lot of them now.
I spend more time speaking to clients than I do some of my own family, and I prefer it that way, to be fair. But you know, we actually become part. I keep referring back to it, but it's so important. We become part of them and their operation.
You're sort of the finance arm of their business, aren't you?
Exactly
really?
that, and we become as an internal function of what they're trying to achieve. And you know, the relationships are so important for us. You know, oftentimes we sit and we talk to people, and I tend to, when I'm meeting new clients, I try not to get into the, you know, nitty gritty of a transaction within the first 30 minutes. I like to find out more about them.
Just know who they are as a person.
Yeah, who are you as a person? What do you enjoy doing? What do you like? And being completely honest, if that doesn't align with our values and our standards, we'll part ways and we'll not take your business on, even if you can do volume.
And I mean, it sort of leads me on to my next question. What's a typical client for you? I suppose there's no such thing as a typical client anymore, is there?
No, not at all. Not at all. I'll try and answer as best as I can. I think for us, we specifically deal with property investors and property developers, whether that's somebody who's wanting to build a portfolio, somebody who has a portfolio and they're trying to diversify. That is very much what I would say is our typical client, is somebody who has an active interest in property and property investment or property development, who are trying to build a life and a future for themselves and their families.
Fantastic. So we know you've probably started your business at one of the worst times with everything that went on.
Yeah.
You know, cost of living, multiple base rate jumps.
Yeah. I swim best in the deep end.
Well, you know what? I can imagine that you do, to be fair. So, I mean, over the last 12 to 18 months, how does that affect you as a business? I suppose makes you a lot busier because the normal mainstream is not available for everyone now. So this is where companies like yourselves come into their own, where you've got specialist solutions for these people. So has it had a big effect on your business?
Yeah, I think so. So I made the jump from employment to self-employment July 2022 officially. And it was very shortly thereafter that the wonderful Liz Truss did everything.
You had a few months to get your feet under the table.
Yeah, only just. And that time really was telling people what we were doing. You know, so then when we started doing it, it was kind of like, are you still doing it? So for us, it was difficult in the sense that we were still finding our feet, and we were finding our feet at a time where lenders were continuously changing what they were doing. Now, for us as being new to the industry, that was a challenge because we'd very quickly get used to something, and within days it had changed.
Products getting pulled
so
left, right, and centre.
So it was very, very tough, especially for the buy-to-let market where fixed rates were being pulled left, right, and centre. Some lenders would give you notice on a Monday morning that the product was being pulled by 5 p.m. You know, literally the same day. And you know, if you're working with a multitude of clients, it's so difficult to pull all them pieces.
You get 10 of them in one go, you're sort of like
snookered. Yeah, game over. You know, for them more than us as a business, but for the client, because then the next rate that comes back on is 0.5%, 1% higher.
Yeah.
And the deal's gone. The deal's dead. You know, we must have had 20 or 30 cases that we were working with that the rate changed overnight. And the deals had just disappeared because the ICR calculation then didn't fit. They didn't accept top slice and whatever it looked like. The lenders didn't do what we needed them to do.
Especially these clients we're looking at, you know, 75% loan.
Highly leveraged. You know. Existing portfolio is typically highly leveraged because they're in a growth stage of the business during the last 10 years of freedom we've had. And it really did. It played I guess for us it worked out beneficial because there's no better time to learn than again at the hard times.
If you can get through this, you can get through anything.
No, agreed, 100%. But I think more so for the clients, we actually turned it into a positive because, as you said, a lot of the customers that were coming to us didn't have many options. They couldn't go high street anymore. They didn't know what to do. But they were all looking to fix. Yeah, they were all looking to fix. Whether it was 2 or 5 years, irrelevant, they wanted to fix because the standard variable rates were just going higher and higher and higher.
At least you know what you're getting. Fair enough, the rate isn't a rate that you
100%.
like, but you know that's what it's going to cost every month.
And you tend to find with portfolio clients and portfolio landlords, they've been doing this for a very long time anyway. So the 5% rates, it's not really an issue for them.
No, they're happy to
but when they're paying 9.5%, 10% on a standard variable, that was a problem. So getting it fixed back in at 5%, they're comfortable because they know their cash flow.
Yeah.
They know what they're paying and how much they're paying. And how long they're paying it for, and everything else is irrelevant to them.
Especially when no one knew. We knew it was kept going up, but no one expected to just keep going and going. So imagine if you stuck yourself in a variable at the beginning of the year.
And we honestly had people that did that. Thankfully, with variables, it's typically not got any ERCs, so you're quite comfortable in terms of getting back out of it. But your fees, your valuation, the headache of actually getting through it and doing it. There was a lot of panic.
Yeah, because I've got a few.
Thankfully, it's calming down.
Yeah, well, I had a few on the variable. Every Bank of England based note announcement, just sitting there, just thinking, right, how much is it going to cost me this time?
Yeah, no, agreed.
And it's sort of like you used to dread them, but I think now we're starting to see a sort of a cleaner route out of things. Yeah. Inflation will hopefully start dropping.
Fingers crossed.
We're seeing, and no doubt you are as well, a lot more people are coming back into the buy-to-let market. We're a lot more active. With that sort of stuff.
A lot more purchases.
Yeah, especially with fixed rates coming back for a lot of lenders, us included.
Yeah.
So we're seeing a lot of that. So what's your typical approach on a deal? You know, argument's sake, client comes to me, he says, right, this is it. Do you look at every single deal the same, I take it? What's your sort of
100%.
approach?
I think we have to. I think we've sort of positioned ourselves to treat every single client exactly the same, regardless of portfolio size or deal size. Yeah. So whether it's a £50,000 bridge purchase or a £10 million portfolio refinance, we treat them all the same. We request the same level of documents and AML checks, and we do everything as it should be done.
Perfect.
And the reason we do that is more so for ourselves, to cover our own backs, to make sure that when, again, we're presenting deals to lenders, we have the full picture. So again, if it's a £50,000 deal, if that customer's got adverse credit, it's the exact same as a customer doing 10 million quid worth of business if they've got adverse credit. The lender pool is restricted.
Yeah, it's shortened.
And the appetite to lend to people with adverse credit, or whatever the complex nature of the transaction is, you have to understand the full picture. So very much so for every customer we have a suite of documents and information that we require in order to be able to process that application, and we don't do it without. And again, same thing. If the customer says, "Oh, I'm not giving you that right now," then I'm sorry, Mr. Customer, but I'm not doing what you've asked me to do until I get it. It's a very simple way of working, but it's effective, and it works. It works both ways, So for us, if we can build that level of trust with the customer, once we've got all of that information, everything else is very simple. Because if we get everything from you on day one, not only can we get you indicative terms quicker, we can actually get you into offer quicker. Because once you say yes, I've already got everything. I don't have to wait for anything, and that encourages a lender when you've got something so quick.
Oh yeah, we love it. We love it because we know the deal's been done properly. So, right, we need latest valuation report, or clients say now, whack, there you go.
But there's nothing worse than you send terms over to a lender and they say, are they okay after 2 days? You say, yeah, it's fine, the deal's coming in. A week later, you've still not had anything or sent anything in. It doesn't fill you with confidence. No. And rightly or wrongly, it makes lenders start to think, why haven't we got it yet? What's happening in the background that we should be concerned about? Yeah. Again, rightly or wrongly, but that's the nature of the industry, right? Is that you've always got to be more risk averse than you are risk free. Yeah. So for us as a broker, and we act as a packager in that sense. We request everything on day one. Yeah. And if we get it, we get it, and we can progress and we can move the application forwards. If we don't, we'll wait until we have. Yeah,
let me know when you're ready and come back.
Yeah, 100%. And there's no skin off my nose if a customer wants to take the time with it, because we've got enough business to keep us going.
You're busy enough.
And it's on them, and everyone's different.
So that leads me on to, how do you see the market faring this year? What do you reckon? Do you reckon we're going to keep seeing good news stories coming out, and maybe see sort of inflation get to a reasonable level, or even at its target level?
I think inflation will continue to come down just because of the way the Bank of England is acting. I think there's very much a lot of encouragement with SONIA swaps and their position in the market, and how they're helping buy-to-let lenders be I guess, aggressive with rates and products. I'm not a huge fan of the low rate, high product fee. Type business, but again, it's each to their own, and it's the customer's decision ultimately.
I think it's just more of a, it's more just a way to be able to transact, sort of thing. I think.
I agree. I think it's two things. I think it's a marketing tactic. For lenders, I think they want to be able to send out the cheapest rate on a marketing email. But at the same time, I think there is there's positives in it, in the sense that if the deal, when we're looking at buy to let, for example, if we're looking at most cost effective deal or scenario over a 2, 3 or 5 year period, then a more expensive rate with a cheaper product might actually be more expensive. So there are positives to it. Again, it's the way in which I guess it's being portrayed and made out that it's a really, really cheap rate.
You're still paying the rate, it's just you're getting a higher net loan effectively through the stress rate.
Exactly that. But I do think the market will continue to strengthen. I think house prices will probably plateau. I don't think they'll continue to drop or even increase. I think that will stay pretty much level pegging for the next 12 months. And I guess there's no data to back that up. It is just my experience and me being boots on the ground, what we're seeing. Surveyors are always a risk, and when we're sending stuff out, surveyors are always. And look, I'll never say a bad word against surveyors, because they do a very tough job, and it is a game of opinions. And it is a professional game of opinions at the same time. I think surveyors have a duty to be courageous, and I think surveyors have to properly research the market and properly do their due diligence to ensure that they're not impacting the property market, because they hold a lot of the cards when it comes to lending and when it comes to property
stuff's
investment.
Getting down values and left, right and centre.
Well, that's the thing, right? The term down valuation, is it a real term? And my point is, if a surveyor is saying that that's what it's worth, it's not a down valuation, that's what it's worth. It's only worth more to a client who thinks it's worth more due to the project or the nature of their transaction. To two different people, it could be worth two different figures for different reasons, depending on their intent with that property, whether it's a standard residential property, or if they've got 300 grand cash in the bank to be able to turn it into a 10-bed HMO with 2 extensions. What's the value of that property? So it really is dependent and relevant to the transaction at hand. And I do think, again, surveyors need to be courageous and ensure that they're understanding the deal and understanding the full picture of what's happening.
And I think a lot of them are quite thinly spread as well. The amount of places that some valuers have to go visit in a day, you can't sort of value a property, a 5-bedroom house in 15 minutes.
Not properly.
And we have had clients say that valuers have been in there for that length of time, unfortunately. But I think as market confidence grows, I think valuation and valuers' confidence will grow as well. Because I think they'll just petrify the PI cover at the moment, because it's so hard to come by. It's
so difficult to get for them. Which is another problem.
I know. We'll save that one for another day, because I think we could be here for quite some time. Right, before you go, we'd like to do a quick fire roundup. So what 3 top tips would you give to people that are looking to move into the self-employed broker space?
I think number 1 is do it. Stop procrastinating and just do it.
Take the leap.
Take the leap, because we get one life. You might as well live it to your fullest. And if it doesn't work, it doesn't work. So what? There's plenty of jobs out there.
True.
Keep your overheads down. And build a buffer. So for the first 12 months at least, try and work from your kitchen table, or work from a co-working space, which is cheaper than taking on an office. There's no need. You can do this job from anywhere in the world as long as you've got Wi-Fi.
It's just an added pressure as well, knowing that you've got that bill to pay no matter what, and you're normally tied in for a long period of time, so it makes sense.
Exactly that. And the second half of that, I guess, was build a buffer. So for the first 6 to 12 months, try and build a 6-month buffer, so that if you have a quiet month, you've still got cash in the bank to be able to get through, and not focus or stress about bringing in new business, because that in itself can drive bad.
Well, you start taking on deals which not decent
waste
to do.
Time.
You waste a lot of time on it, and you sort of it becomes even more frustrating, doesn't it?
No, 100% agreed. And then my third, I would say, is get your branding right from the start. And additionally to that, and a way in which I would do that is don't try and do it yourself. You're good at what you're good at. You're not at what you're not. if you've got people, or you can find somebody who can go through a brand awareness report with you, and it costs you 600 quid or £1,000 to do it.
Worth every penny.
It's worth every penny, because they help you understand what your vision is, what you're trying to achieve, and they'll tell you how to get there. So spend the money.
Yeah, I tried to think what sort of marketing ideas I would have come up with if I was left to my own devices. Luckily, we've got an amazing team here that does it all for us.
Yeah, no. So, honestly, mate, same as me, right? Because for me, with myself and Jazz, fiance stroke business partner, we she'll love that I've said that. By the way. I'm very much very impulsive, and I'm very much have idea, do it. Jazz is, and we say this as a bit of a sort of in private joke between the two. Jazz is very much the anchor to my sales.
Yeah.
And she's the one that will say, great idea, let's consider it, but have you thought about X, Y, and Z? And that reels me back in, and it helps us do things the way in which they should be done.
I'm exactly
so
like you.
all the success that the business is having or will continue to have is all Jasmine. Nothing to do with me.
There you go. Good, right answer. We can make this your ringtone now.
Oh, absolutely. We'll save that one.
Well, I just want to say a massive thank you for coming in today. It's been amazing talking to you, and obviously we at MFS are looking forward to working with you again this year. So
thank you for having me.
Thanks
it's been a
again
pleasure.
for coming. If you've enjoyed this episode, please don't forget to subscribe, like and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. You can also stay connected with us on Instagram at MFS_LTP. See you next time.